Good morning and welcome to Real Talk with Mr. Realistic. Hope everybody's doing great out there. Happy Sunday. Got some football coming on today. Before we get started, just a reminder, I am not a financial advisor, all right? I don't get paid for any of these things. Anything I say is purely for entertainment purposes. So please make sure that you do your own DD before doing whatever you're going to do. All right, so that's solely on you. So make sure that you are doing your due diligence. All right, so let's get in today to TradingView. And TradingView is my go-to platform for my charts. They have a app on your phone you can use. It is very simple. That's what I use for a lot of my Twitter posts, doing screenshots, highlighting. You can't do all the features of the desktop version or the browser version, but it is fantastic, especially if you're in a pinch, you're at work, you're somewhere with the family. Shh, don't tell my wife I said that. But you are going to be very accessible. It's very clean looking. You can change this to like a dark setting or a white setting, all your preferences, okay? So I'm going to go through my setup. It's a very basic setup. And that way it doesn't get all cluttered. You'll see a lot of people that'll have like all these crazy things going on. You got the MACD, the RSI, the volume going all over the place. You'll got your indicators left and right. I, I, I just need something basic, something that I can just see it and just know exactly what I'm looking for. If it works for you, do it. Some things are going to work better for you that don't work for me and vice versa. So figure out that what works best for you. Okay, so right here is the desktop version. Okay, so you can download it. TradingView is free, okay, but there are some limitations to that. So you want to make sure um, to check out that 30-day free trial. I think it's always going on. And then after that, if you like it and you need more indicators, you're going to have to pay for it. But after the trial, they offer it a lot cheaper than the normal prices. So if you look at the prices right away and you're like, oh my gosh, it's crazy, they give you like 40 or 50% off or 60%. I think 60% off after your trial. So that's what I did. Saved me a bunch of money. And in the long run, this is an investment. This actually is a tool to help me make money. So it's completely worth it because I make way more than it costs to um, subscribe to this. So right here we have CYBL. So up in this left-hand corner, you have that. You have your list over here on the right side, and you have alerts that you can send if a stock is reaching a price point that you want, and it'll actually send it to your phone through your notifications and everything of that nature. We'll get to the side in a second, but over here you can just choose, put in a stock, and or type it in here. So let's do, I'll just type it in for y'all so you can see it. CYBL. All right, it is an OTC stock, so it'll tell you the exchange that it's on. You can also narrow it down to say you want to do crypto. You can just put that in if you're looking for something or just stocks. Click on it, chart comes up. All right, so all these different things, let's get rid of the RSI, so it's just plain. All right, so I have mine set to candlestick charts, and I previously in a tweet beforehand told you all that you need to know how to do candlestick charts or understand them. It's imperative. I'll do a video on this, just like a short one going over it next after this. But right here, as you can see, all right, we have the daily, which is up here. So up here, you can do seconds, minutes, hours, days, and then some ranges. As you can see, I've got some highlighted right here, 5, 15, and 30. Those are more of like a day trading setting. I would not use those if you're going long or even like a long swing. The hourly and the daily is what you want to go by. It'll be a lot more accurate. So if we go back here, we want to make sure that we have our candlestick patterns on. I believe it comes on. I've already got this thing set up, but it's pretty easy. Comes right on. Uh, as we go through this chart right here, you zoom in and out. You've got your days at the bottom. Okay, price on the right side. USD. If you're somewhere else, you can change your currency right up here as well. And then you got your crosshairs. You can change that right up here in the top left. You got the cross, the dot, okay, a little different arrow, and where'd you go? And eraser. I'm just going to stick with the cross. I like that. It's easy to follow, and it lines up with the top and bottom. As you can see, April 29th, and at that mark was well, let's just go over here. So if I go to the top of this candle, it peaked on September 30th, 2021 at 664. All right, so it gives you a fast indication of where it is. Also, a pretty cool thing on the daily chart. So remember, each one of these candlesticks equals 1 day of price action. That means the price went up to as high as this candlestick, and the furthest it went down was this little stem down here on September 20th, okay? And then it closed up here on green. So like I said, we'll go over that. But if you just hover your cursor right around there, and if we look to the top here, I'm just going to show you real fast before, keep your eye on this area. So if I just hold it on there, it shows me that 0.0214 is your open. It had a high H of 0.0374 for that day. It had a low of 0.0210 and had a close of 0.0320. Okay, this equated to a 0.0101 increase, which is 46.12%. Hence the massive green candle right there. Since this is a daily, any massive green candles like that are going to be big. If you go over to the next massive green candle, it's 2584 increase, and we had almost a 50% increase on October 7th. And now that I look at that, I'm going to retrace that. A stock that goes up 50% in a day usually retracts some before it goes. Keep that in mind. So let's also look at the opposite. So this red candle right here, okay, so it hit the peak up top. That's as high as it went for the day. This is as low as it went on the candle wick. So those are the wicks, and then the body is an open. It opened here, went up, came back down, came back up, and closed right in here. So if I hold that up, open 651, high 66, low 463, close 54 for a negative 1680. And then as you can see, continuing to go down, dropping. Now, so when I send you all my tweets and everything about how much the stock is increased in a time or decreased in a time, an easy way to find that is this little ruler right here. Okay, so if you click on this, boop, you can see how much it's increased or decreased over an amount of time. So let's say we caught it at the green right here. We're going to say, since the breakout, how much is it gone? So you'll click there one time, and then you'll just drag it on up, and then follow that arrow to the top of that candle wick, and boom, just like that. It went up 534, which is an increase of 414.05%. Okay, so it had a volume from that time frame of 4.462 billion. So that's really good info for you to know how much it is increased during that time frame. Okay, usually on large runs, you're going to have large takebacks. So let's go ahead and do the opposite. So just click that measuring ruler again. Okay, and then we'll just go right up here. The blue will disappear as soon as I click. Boop. And let's drag it on the way down. All right, so now we're looking at from recent highs to recent lows. Okay, so it had a pullback of 59.89%. And as I've said, based on what I have noticed, and you notice I missed a little bit of the wick, so it's probably like 60 right here. Most OTCs I've noticed after a big run pull back around that 50% range. So it could go more. I've seen like MJWL and some others. They've pulled back like 70, close to 80%. So just a heads up. Okay, so 60% is a good stock does pull back. That we just went from 400 something percent, and when you drop 60% of that, that's nothing. Okay, and notice the recovery right here. If we do measuring again, we can take it from the bottom here. Let's see how much it's recovered since then. It's recovered up to, okay, it's not where it's settled at because it settled at 5 on Friday, but it went up to 113.75 gains. If you are a short-term trader, this is what I would be looking for, okay? I would be looking for the bump. That's 113, 114%. Okay, you're not going to hit 114% every time. You're not going to hit the top. Like I said, I never hit the bottom, I never hit the top. But this is what you're looking for if you're trying to get in and out, quick swings. You know, at 113, you're looking probably at about 100% gain in a day, all right, or 2 days, sorry. So if you bought near the bottom of this day, okay, and when you were swinging it for a day or two, boom, huge gains. And then also, we'll get into indicators that will lead to this, those 400 gains, which you get into. All right, and also if you ever need to zoom in on a stock, it's really sweet. All you have to do is go boop, and it brings you right into the area that you wanted to. Scroll down on here, consolidate it very nicely. All right, so the daily, like I said, is a candlestick right here, equates to 1 day of trading. So if we go up to the top, I've made these favorites right here. So clicking these will pop these up along here. That way it's just nice and easy for me. Hourly is the other one that I use exclusively for my trades with the daily. So just like the daily, this one is each candlestick represents 1 hour of trading time for that day. So if we looked at, let's see, Friday, it's just the 8th right here, boom. So everything to the right of that blue dotted line going up is for that day. So on the line and over to the right, every hour is equated to right there. Okay, if we track backwards in time, Thursday, we've got from here to here. Okay, notice how they're broken up with the colors too, right here and right here. So you can keep an eye and see how the stock is fluctuating. Now you're like, Mr. Realistic, totally get it. But I want to know these indicators that you talked about. Totally understand. So these things are the best ways to find out your best entry and exit points, I believe, for a stock. So if we go up here, we have a bunch of different, and these are just favorite indicators. Um, Obviously, they may or may not come up as your favorite. So we're just going to click on indicators right here. And as indicators, you have a ton. Okay, this is just their candlestick patterns. I mean, it's on and on. There's actually a bunch of traders on here that make their favorites, and you can use them as well. So they'll make up exactly what you are looking for if you're looking for something specific. So let's go and let's do the RSI, which took away a second ago. So all you have to do is type in RSI, Relative Strength Index. Okay, stars pop up on the left side right here if you want to keep it as a favorite. That's what I did. That's why it's on that favorites tab. So I star that, I click on it. Boop. All right, and it pops up down low. If you hover over that, it says RSI 14 close. This hides the whole RSI. Okay, you can remove it and you click more and you can get all this stuff out of it. If you want to copy it, you get source code, you want to move visual order, you want it in front or behind something like volume instead. So all you're going to do is, if it's not already set up this way, so you'll click settings right here, okay, and let's see, style. You can change these colors to whatever you want. I just have them because they kind of pop out right in front of me. Use whichever colors that you want that are going to pop out. So like the line right here, I just have purple. I mean, you could do green if you want. You know, you can change everything about it right here, the visibility. Let's just change the line so you can see, all right, it's more visible. If certain colors stand out better to you, you can go ahead. I just know in my mind, I just see this and I know it's the um, RSI, and I can follow it very easily. Background, same thing right here. This is the background. Now, what you're going to want to do over here, if it's not already, it might be there. You put same as chart. You can go everything. Same as chart is a great way to keep it though. It keeps it on the hourly, but like, I go by the daily though. So, if I wanted to, I could just go by the 1 day right here and I'll stay on the 1 day as I'm watching the hourly. So I'm going to do that because I think the RSI for the daily is the most accurate because you got to think about every hour it's going up and down, going through here. But the daily's over the time. So when that daily is this high, that should be freaking you out. 93.86 for CYB L. Okay. So if you look back, I'm not going to go back that far, but you look back at the hourly, I mean, you're going to see, look at this, all over the place. Too much to watch for me. Okay. The daily is a lot more accurate in my opinion. So 14 is just the length of days. Okay, so you just want to, 14 is pretty commonly used, and hit OK. All right, and that is the RSI. So for the RSI, all right, you can move these lines right here all you want. You just click on them and move them. I think it's up right there. You go, right on the side right here. Um, there's really no reason to. They should just stay there anyways. So 70 right here and 30 at the bottom. Okay, those are the big numbers you want to keep out. You are looking for your stock to stay within these ranges. This is a good range, 30 and 70. If your stock goes above 70, it is considered overbought. Okay, let me say that again. If it goes over 70, over this line right here, it is considered overbought. It can continue to be overbought as we can see in CYBL. But let's look at the time frame here. Okay, it continued. Let's see where it went. 17th of September. Okay, it started. That was a Friday. And then as we move, it continued all the way up until the 30th of September. Okay, so 17 to 30, that's a long time to stay there. Hence why this stock started to go down. Okay, that is why it went down. It went down because it ran hot. Okay, if I ever say it's running hot, it means that it's running in the 70 plus zone of the RSI daily, and it is moving, okay, in this for too long. All right, you'll hear me talk about it with PUG. All right, that it just doesn't make sense. All right, let's look at that real fast just so I can do a comparison. All right, you saw how the RSI on the CYBL was staying straight and smooth. Look at this. All right, it's having minor pullbacks, which are good. You want to see some of these pullbacks, but essentially, let's look how long it's been in there for. September 20th. Ironically, it sounds like some of that CYBL money might have went. Um, oh, wait, no, that'd be 30th. Sorry. So as we go through here and we go up, it's been running since the 20th. Okay, and we're looking October 8th. It's coming close. I mean, we're at 85. They've had just these small pullbacks. I mean, look at this. There's 91, almost 92%. All right, and it fell to 83. Whoop-de-doo. It needs to be down in here. Okay, so this thing's going to get ready to pull back soon, and that's when I'm going to pounce when it gets down in this area, and after it starts to consolidate. We'll get down to that in a little bit. But that's the difference. I mean, if you just look at these charts, these pullbacks come from the RSI, PJET, another huge one. This one's been running great. Look at the highs pullback, and then highs had a pullback right here as well. Okay, so look, going up, got overbought. Okay, everybody's been waiting for some news, didn't really get it, coming down, cooling down closer to that overbought zone. That's a good price to buy in typically. Below it's even better. And then as it's going up, and it's just it doesn't have that catalyst yet to send it to the overbought zone for an extended period of time, or the hype. All right, so let's get into some other indicators as we continue. So we're back to the CYBL stock, okay? RSI we just discussed about. So we're following that RSI. As we know, if it runs too hot for too long, it comes back down, all right? And it's cool. I don't particularly, this is good, but it technically could come back down some more. Let's just keep it at that. That's if we go to the daily. All right, so let's get down to our other indicators and my favorites. All right, so we have moving average. So see if I, all right, so if you just type in MA, because you'll see I do that a lot, just MA. Click on moving average, you'll be doing this one a lot. So whatever you put into this chart right here, it goes up in this corner over here, and you can hide these so that you don't see them. And also unhide them so you can see them, and then you'll hit that settings button. All right. So the length is the amount of days. So remember, I like the 8, 21, 50, and 200. I find that they always stay within those lengths because of other traders. Um, so that works for me. Something might else work for you. That's up to you. So I'm going to put the first one at 8, style. All right. As you know from my other videos, I like to keep this one all the green. So that green's a go for me for a short-term entry. So I keep mine at green. Precision, not going to do anything about that. Leave those the same. All right. So that's that. It's that easy. Okay. And then you hit OK. So let's look at this on the daily. So as we can see, it's following this 8-day moving average, okay, over 8 days, and it's following this line, and that dropped right below it. That's when you know that's a sell indicator. So it dropped below it. It's still not enough information for myself as a trader. So we add more information to it. Okay, so by adding another um, moving average, let's add the 21 next. And my 21, I like to keep blue. Like I said, do whatever works for you. That's it. Hit OK. All right. Now you have your short-term indicators. Okay, these are your indicators that will tell you and predict and forecast the stock motion over those time frames. So what I like to do for my entries is I use the short-term indicators. Okay, so this is the daily of CYBL. If we can go back to the beginning right here, all right, consolidating, nothing. This is boring. This is what we call a sideways chart. Man, that's a long ways to go. But hey, ooh, we got a little bump here. Ooh, feeling good. Got another little bump going through here. All right. Let me zoom in on that. So hit the zoom button. Just that area pops up right there. See this line? It's breaking upwards. I like that. I like that a lot. And if we scroll back, what you couldn't see from far away, now you see up close, is it made a nice little increase back here on, or a nice crossing. We like the 8 over the 21. That's bullish. It's going up. Bull strikes up. Bearish, bad, going down. Okay. So if the 21's on top, we don't like that. If the green 8MA is on the top, that means bullish. So right here, I would consider a entry, but as you can see, it's just riding sideways right now. So I just keep a close eye on it. There's no reason to get in on a sideways 8MA over 21MA, okay? Because you can see I haven't really missed much. It's going up a little, it's running sideways a little. All right, let's fast forward into time. So that was on like the 28th of May, 1st of June, and it started to make a move on the 16th. All right, so we're talking beginning of the month, halfway through, we're finally seeing that break. Okay, you could have got in anywhere in the low double ones, right around there. I would wait for around here. You could still get in it a little bit higher, but as you can see, it pays off. As we ride that 8 MA all the way up, look at this. We just hold it. We hold it. There's no reason to sell this. Okay. You're at, let's say you got in on this bump right here. Let's say you got on the high note. Doesn't even matter. You won't, but let's just say you do. You got in at 0.2. Oh, 0.02, excuse me. All right. And we go to the next. The low for the day was, it dropped 0.003 for you. So low was 17. All right. That would be at open. All right. And then it peaked all the way up to 33. If you want, hey, doubled your money right there. Go for it. Well, depending on where you got here, what we're saying we got there. So you almost doubled your money. You will the next day, and you go up to 44. All right, and then whoop, you got 59. Now you could hypothetically cash out right here. RSA is a little high. It's coming down. You don't know how far it's going to go. That'd be a safe short-term play. But if you like the DD on this and you like it where it's going, you do. You just hold it out. So as we go out, it just goes down here, brings down. As you can see, the body of the red candlestick starts to get thinner. All right. When it gets to just a line, that's called a doji. That indicates that selling and buying are undecided. They don't know what it's going to do, where it's going to go. Keep your eye on it. Okay. Because it opened here and it closed here, which means, it opened, hit down, went up, and then stopped right here. Back to back days. So this, it's not falling, it's not going up. I like this because the trend, I would see this as a bullish mark as the line 8 MA is continuing to go and it's far away from the 21 MA. Okay, so we just ride this up and we're just keep riding. We ride this sucker all the way up until we see a bearish signal. Okay, so as we go, all right, we get to here, we see a candle. All right, now we're getting a large drop right here. All right, this can be up to you. If you're holding long term, this isn't going to affect you because remember, you're in at 0.002. So if you're getting up here, we're already at 0.018. You've made a good amount of money, even if right here at 1225 was the closing. It got as low as 103. You're still 5x on your money. I don't think you're still stressed out about it going too far down, especially if you like the DD a lot. You can, you see it going. You can choose to scale out of here. By scaling out, I mean taking a small portion of your earnings. Let's say that you put in $1,000, just make it easy right here. Okay, you could take out $1,000 up here, and now you're riding for free for the rest of the way. Okay, so you're not worried about losing that because it's a free ride and you really like the stock. Okay, so that's completely up to you. All right, but if you choose to sell it all, I mean, you made a healthy profit. Now what you're going to do is you're going to follow this line and you're going to see, boop, boop, boop. Oh man, this thing's coming up pretty well. As we look at the chart stopped, it's pulling back up. It's got 3 solid green candles. Oh man, it's looking good. These little pullbacks are nice. These are steps, okay? Steps. What I don't like is this. This leads to a cliff, in my opinion. It's nice, but you can really drop really hard from these long green candles too. Kind of scary. It's nice for the day, but overall long term, it kind of scares me out. All right, so we're following it back up. All right, we see that the crossing's coming in. All right. I like to wait for confirmation. You'd be shocked. Actually, the daily's more accurate, because if we went to the hourly, as we can see, it's not as accurate. This isn't a very good chart to show you at. Well, kind of. It could bounce. Somebody could come in and try to block this to prevent this crossing from happening, and that's when the price action goes down. But as you can see, this is sideways. You're not buying into a sideways pattern because you'll end up losing money down here. Okay, so we want to make sure, if you're looking for an entry, I like daily. Daily is the way to go, for long swings or long holds. So as it comes through here, all right, as it's coming in here, you could buy right around the 13th of September. 14th is fine too. All right, right in there. Don't buy it open. Wait till 10 or past that, so you can see where this is going, just to make sure it's going in the right direction. All right, let's say you bought on the 14th. We look in price action at the top. Remember up here, it tells you if you just hover it over the stick. It opened at 151, had a low of 151, and closed, or had a high of 175 and a close of 169. Let's just say you go back in at 175. If you're coming back in with a new one, or if you are, um, just adding to your position, you think that this is going to be another solid run, news or catalyst is coming, you just ride it with the 8MA. Look at that go. All right. And then as soon as you see this thing starting to turn right here, that's when you need to keep your eye on it. All right. This this is where you really gotta watch for a hard down curl. And let me see here. I believe TGGI had a strong curl down on the daily. Yes. So as you can see, this one was following it pretty well. Delete that. Okay, so as this is going through, look, it's following that AMA, but it's coming down and now it's curling down. It's flattening out, which is nice, but what really freaks me out is when it drops down, like straight down. I know one, RGBP. Let me pull that one out real fast. RGBP. All right, so it actually did it twice. All right, so let's look at the first run back in, April. So as you can see, huge jump, and then I see that, I'm out. Okay, so I'd secure whatever because it's going to go down. It's going to keep going down for a while. But as that leveling off, I'm just going to take profits from there, and then get back in later. Same here. As it's going up, you're following it, starting to turn, curl down, large red candle. If I see this, peace out. All right, it's going to be hard to come back from that one. So I'm probably peacing out around here anyways. But as you can see, long term over it, it's going down. And yes, here it is. So you're saying, Mr. Realistic, this would be the perfect entry right here. Look, it's getting so close. Let's get it closer. Somebody, I think they had dilution or something of that. And they were adding shares to their stock, and that forced it to drop down. So if you were trying to time it, I've done this before, and I'm like, oh, I'm going to get in right here, and then it's going to go skyrocket. No, right here. All right, you want to wait for that confirmation because if not, this could happen. So let's say that you got in, you know, say you got in the middle of this, just to be fair, 374, sure, 372. All right, got in here, and then, ooh, all right, you're looking at a minus 46 to start off, and you're probably holding in a bag, holding it. If you see that this is staying away and it's starting to tread down after a day or so and you got caught there, cut your bags. It's a lot less. Look, 46. Let's do it. If you cut your bags in a day. All right, let's say right there. Say you sold it. That's 10% on the first day right here. Okay, so 10% cut it in the middle there. All right, you can say more from the top, obviously, but 10% that day. And then the next day you could get out on 5 15%. Okay, so it's a lot better than 48% and holding, waiting for a recovery. This thing's probably gonna, it's got some time to go. As we can see, they're separated. It could have a large candle here. Who knows? Basic supply and demand. All right, so those short-term indicators, the 21 and the 8MA, are the ones I use the most for sure. The other ones I use are moving average. All right, next one we're going to use here, and let's hit that, put that in, 50. 50-day moving average. I actually do use gold on this one. Okay, that's over 50 days, as we can look at the trend of CYBL from its breakout over 50 days. It's holding a very, very nice steady pattern. All right, and then our next one, we'll go to indicators, we'll go to moving average, and we'll change this. I like purple for that one. I think I just kept them basic so I know exactly what they are, and 200. So our 200-day moving average is obviously over 200 days. So our long-term indicators are 50 and 200. When the 50 is on top, that is a golden cross, which means heck yeah, that baby is going to hold it for a while. The long term is looking good. If you're a long term holder, that's what you're looking at. Okay. If the 200 goes on top of the 50, then you're looking at the death cross. And that one is peace out. Might check you out in a long time from now. Okay. So, not really what you want to see. Let's look at it from the hourly perspective. All right, so from our hourly perspective of CYBL, I have kept on the daily RSI because I like it that way. I find it more accurate. But let's look at the difference on this chart with both of the long-term and short-term indicators on the um, hourly chart. It's a lot different than the daily one. So as we can follow along here, let me, I don't want to zoom in too much. I mean, I could zoom in this whole thing, but I don't want to write it all the way. All right, so you're in here. If you're just swinging, you could go here. You see it starting to curl. You say peace out. As it comes back, I'm back in. But see how sometimes it just kind of rides that sideways. That's why it's not 100% on the. It's not 100% on anything, but it's a higher probability on the daily. As you can see, it just coming back in and out, jumping in and out. But what you're looking for is it to follow a trend. And I'll get into that in 1 second. All right, so that's your short-term indicators. You can follow the green and the blue all the way up and just see how it moves. It moves a lot similar to the daily, but the daily is on a larger scale more accurate. But it gives you an idea. Now, the long term, okay, as we can see right here, we had a golden cross, and since then, it has followed up the whole way. Long term, I'm very happy, but now I'm seeing this. This makes me nervous as a long term investor, um, and especially with this dropping right here, as you can see, all right, the 8MA crossed below the 21, that's bearish, and on top of that, the next couple hours, this is nosediving. This tells me right here, get out. All right, so that's where the hourly comes in a lot more. Over here, I'm going to show you, you get a bunch of different things that you can use. I'll show you a bunch of these at a different video. But for highlighting this right here, boom. All right, that's a clear indication that this stock is going down. All right, that's a secure the profits and time to keep an eye on next entry point. All right. Okay, so, oh, hello. All right, so, oh, why don't you go away? Go away, buddy. All right, so, oh, that's right. I'm used to using my phone. I really like the desktop one, but I'm at work. I don't really have um, time to be on a desktop. So as we're going through, this drops down here. All right, we're looking for the bounce on the short term first. Um, it comes down, bounces, comes sideways. I'm not ready yet. I think it's a false bounce. Um, right here, as you can see, people thought that this was a good dip buy opportunity. It wasn't, obviously, because why would you want to buy at 1.6 when you can buy at 1 or 1.2? That's called a dead cat bounce. I don't make these things up. It's a legit term. So this right here always happens, and I'll show it to you up top as well. People think that dip buy, perfect way. People, oh, these guys are idiots. Give me those shares. Yeah, you'll keep getting those shares, and you're going to be holding bags, or you're going to be drowning because you could have got a lot more. All right, and this potentially could go down more. As you can see, it did go down more over here. So this is sideways, not looking for it. We had a death cross right here. Why would I go in with a sideways short term and a death cross? There you go again. All right. 8 MA drops below, 21's on top. That tells me bearish. It's going down some more. Death cross, 50's below the 200, and we just follow it. All right. Following, following, following. All right. This looks like it's going to continue to drop, but there was a massive green candle right here, August 31st. All right. Assuming that there was some type of catalyst coming through. A lot of buys in this hour. And notice that the 8MA is screaming up. All right. Also keep in mind, this is a large green candlestick, which means it's going to have to pull back some. Remember, you're thinking steps. Okay. So up, down, up, down, up. All right. Making those steps. So I wouldn't buy on this green candle. I'd wait for it to come down some. It's just the green. It's obviously still flowing. Let's get a little closer on that. Hitting buttons I shouldn't hit. All right, sorry about that. So going through here. All right, so I catch it right in here. All right, bounces off the 50, and look, it's just going up, and we're following that line, starting to dip. It could continue to go down, but then we look, hey, the long-term indicator is telling me that it's going up. It's closing in on the 20, which means that a golden cross could be coming in. I'm not too worried about this because of the long-term indication. So I hold, okay? As I go through, I'm following it. Huge sell right here. It looks like it opened and then just dropped. Opened high. I don't understand why it would open high so much on the 13th. I'd have to look back at it and then it dropped down. All right, so you're probably freaked. You're like, yeah. People are like, oh, I'm getting out of this thing. It's going down. All this right here is worrying me. I'll take my profits or whatever. And then as you can see, we had a bullish crossing right here. And you hop in on that crossing and you follow it up and you just keep following it. It's coming back. Let's make sure it doesn't cross below. I'm still looking at my long-term indicator here. Golden cross right after here. It bounces off here. That means it had a lot of support buys. People really wanted this to stay above the 21. So people were buying in this area right here, making sure that this downward cross did not happen. Okay. Golden cross happened because of that. And as you know, golden cross is a long-term bullish indicator. It's hold a golden cross for a reason. And as we follow that AMA, we're just holding above it. We hold it, hold it, hold it. I mean, it's just screaming upwards. Let's make money. All right. And we just hold it. And this thing's going. And this is how we're making money. All right. Long term wise, bullish, 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 bullish. All right. Now I'm kind of worried. All right. Short term wise, bullish, 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 bullish. Getting a little worried, but we've got long term looks good. Coming down. It's going a little sideways. It's not straight down, which is good. Coming back up. Notice how these two are screaming. This one's screaming down. This one's screaming up. That's a good sign. Catches back on the good side, bullish side, and rides all the way up to the top. And then free falling. Yeah. That long candle worries me every time. That means somebody's dumping a lot of shares, a lot of large red candles like that. Let's see what's the percentage of that is. I mean, just this day alone, it dropped all the way 26%. All right, so yeah, that's a single red flag right there. 2 days, so that was on day 3 of a red day too. So we're talking about, that wasn't all the way down, I think, but we're talking about a large percentage um, drop right there. It hit a wall. I mean, look at the RSI over here. I mean, we're 93.87, and it was holding that 93 range since the 28th in there. So not only looking at these indicators, you have the moving averages indicators, excuse me, you have to look at the daily RSI because look as this thing's flying up. Man, two giant red or green candles, all right? This is bound to happen right here. But this is just oversold, and this stock it's a very strong stock if you follow it. It's got a large following. Anything's posted, the likes are just hundreds upon hundreds within minutes. So, I mean, it's crazy. Thousands on certain things, but it can't run this hot for so long. So, if it's holding this for a while and it's not breaking, which I mean, um, it's not breaking up above this line right here and holding, it's going to plummet because it doesn't have any more gas in the tank. It's like a car trying to go up a hill, all right? And it's stuck and it can't keep going. And eventually it's going to run out of gas and then it's going to fall backwards and fall down, all right? And that's where you exit right there and you wait until we get an indication next to buy. All right. 200 MAs are usually a solid buy. Okay. Notice on the hourly and the daily. Notice it broke 200 right here. It should have kept dropping. That's a huge U-turn. If you follow the stock, you know why it U-turned. The Twitter came out and they pumped it up to save it with acquisitions and everything because this thing was falling and it was going to continue to fall. And they saw that if you break this line right here, it's going to continue to go down. All right. This was purely a save by the company on their Twitter account because, like I said, they have a lot. This RSI right here should have been down right around this area, which would have been fine. It really doesn't matter. But there was an agenda behind it to save the stock, and that's what they did. So keep an eye on that. That's why it could pull back. Notice how this is screaming up as well. Make sure that the 8 MA is screaming up too, because eventually it come down. I think we're good. I think this thing's going to run to 10 cents. I mean, just look how it's coming down, screaming up, consolidating, and going up. I think the next leg is up towards the 10-cent mark. I don't know if we hit it. Definitely could with the RSA coming down some. As you can see, it can hold it for a long time with this stock, but it's something to keep a eye on. All right, one last thing before I get out of this video. I know it's a longer video. It's just going to happen. There's just a lot of information. All right, trend lines. I'll get more in depth on this in a different video, but just so you have an idea, trend lines are just taking from a support level, which is the bottom of a green candlestick right here, and following it upwards upon the next support level and going through. As you can see, it broke through that support line right there. You can delete these. Where is it? Right here. And you can also move this, by the way, if you don't like it where it's at. But let me find. All right, so we had a downward trend. So you take the top of the resistance right up here, and you go over the top of the next one, and let's pretend that that breakout didn't really happen right there. So as we do it, all right, so top of here, and just let it roll down. Notice that why that wick didn't break up and through, hit resistance by hitting that trend line right there and just kept dropping. Take another trend, drop it through here, drop it to the bottom. It's just gonna keep going down. Um, all right, so it's dropping in this channel, and then 200's right there. It was going to continue to go down here into this channel right here. And as it continued to go, it had to break above this trend line. Okay. If not, it's going to continue to go. If it broke below, it could have broke below here. There wasn't really a trend line beneath it until this part. Um, but like I said, that tweet came out and bounced up through here. As soon as they saw it broke 200-day support, um, and you'll notice the tweet came out right after that. Same with ILUS. That thing was going to go down, and they set out a tweet to save that one as well. But yeah, it would have probably bounced right off of here and just continued down all the way until it met a support level. So we find that support by taking a horizontal line and we go back to these past candlesticks, okay? Every time a stock, all right, pulls back and creates a green stick, it's creating a line of support, okay? And as it goes up. So if we were here and we were going down, okay, so this would be a first line of support. As you can see, this red stick broke that. So that support line has been broken. Okay, we go to the next one. Okay, follow along. This would be our next support line right here, this green stick. All right. It bounced off of it. You can see the wick went, but it came back above. It's good. All right. Still good. Broke it. All right. It's going through here. It's breaking. It broke once. It's coming back down, and then you can see the downtrend. So then we go to the next line of support. Notice the let me show you a gap too. Look at this gap right here. All right. A gap means that you gap up. I don't like gap ups. I'd rather have it covered for a better chart. It means the stock's going to come down to cover this. So there's not a gap in between this stock, this bottom of this candle and this one as well. So our next line of support coming down is right here. Okay, so it bounced, caught right here, support, green back up. All right, and so as you can see, this candle broke, so then it goes down the next one. You get where I'm going with this, all right? So you just keep dropping it, and you see it broke again. So you go down to you go from there, you go to the next one, all right? This thing was going to go until the next support line, most likely, and that's where that tweet came. Now, excuse me. Now, you got to be looking for a breakout from here. And as you can see, the breakout was above this trend line. If this broke above the trend line, it was bullish. And it did. So now this is a bullish chart. Now, this is a good thing. A pullback is very healthy. And I'm going to take away these trend lines so I can show you why it is healthy. So let's remove these. Okay. So previously, these were your support areas. Okay. So all these, the beginning of these green candles at the bottom. Okay. And it goes all the way up. You're relying on the support zone. As this pulls back, RSI cools down, it comes down, so it's not so hot. It's in a good range. But and now you have a new high. This is your new all-time high right here. Okay. That's good. That created higher highs. Okay. So now what we're doing is we're creating higher lows. Previous lows, new high. All right. This was a high. Okay. And then we hit a low. So these are your new lows. These were old ones. These are your new lows. Goes up, newer low, newer high. Okay. Goes up, goes up, goes up, newer high, newer low, newer high. Okay. So now we look over here. As we drop, okay, and we're coming back down, this is fine. Okay. We obviously don't want it to go to zero, but these are creating newer or new higher lows. Okay. So you don't want to stock if this is your lowest point right here and you're straight up and this is the only support that you have. Let's just imagine the stock just went boom. It's gonna fall hard to this support line. There's no other support. Whatever comes up must come down. Okay, so now as we do this, and now as we're starting a new trend going upwards here, this is our new line of support. Support, support, support. All right, you rather have a 405 support than a 220 support, a 322, a 371. Okay, and then it's going to continue to go up. What you're keeping your eye on, and based on what I see here, I think it's fine. 200, excuse me, 200's here. It's running nicely. The 50, okay, as you can see, if it was screaming down, that'd be a red flag for me, okay, but it's not. All right, green screaming up, 21 screaming up right here, so 8, 21 screaming up. All right, as you can see, that's causing the 50-day moving average to start to flatten out. And what I would like to see from this is I would like to see it to go back up, okay, and this to continue going this way, staying above in a golden cross. This continues to go up. This is what I want to see. On the next one, I want it to see it come back down 50+%. All right, creates those new higher highs, which will come up here. Okay, so those would be your new resistance. They're trying to stop it, stopping from going up there. And then it's also going to create those new higher lows. Okay, so now you're building your support at a higher number. So what you're looking for is your stairs. Boom, 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 boom. Okay, so you're going to get those higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. That's what you want in a stock. Okay, that's why ILUS is running like a madman right now. It's doing slow and steady on that. But look, okay, highs, lows. Let's go hourly, a little more easier to see those. So, all right, stepping stones, stepping stones, stepping stones. Okay, now I'm curious to see, is the stepping stone going down further? All right, before it goes up. We'll see as it goes through. All right, sorry about running so long. Just trying to be in depth as possible. Like I told you all, there's just a lot to know, and I'll break down all these other segments just in smaller chunks. I just know you all are super excited to learn about the charting, so I wanted to give you a vast look at it. I will do short segments for just the moving averages. I'll do one just for the RSI. I'll also do one for your chart minutes and hourly, so you can look at that as well. All right, I hope you all have a fantastic weekend. That is all I have for our Real Talk with Mr. Realistic. I hope you all have a great weekend. Go Skins.